Hi, our group has chose Sime Darby Berhad as a company to be analysed. So basically this is a Sime Darby Berhad at a glance. Sime Darby Berhad is the largest conglomerate in Malaysia and one of the largest in Southeast Asia. Within its orbit are more than 270 operating companies in 23 countries, with its most extensive foreign operations in Hong Kong, Singapore and Australia. Sime Darby generates 38% of its revenues domestically. In the early years, Sime Darby focused on rubber plantations in the region to convert to the production of palm oil and cocoa oil. It has broadly diversified activities include a wide range of industries, with the core businesses being plantations including oil palm and the company's original business, rubber, tire manufacturing, heavy equipment and motor vehicle distribution, property development, power generation and engineering service. There are also other business operations include paint manufacturing, refrigeration product manufacturing, travel and tourism services, hospitals and golf courses, which can be named as the smart move of Sime Darby in whole. Anyhow, some Malaysians felt that Sime Darby was taking profits from its successful domestic operations and investing them unwisely overseas. So, in 1976, the Malaysian Government Trading Office bought up Sime Darby shares on the London Stock Exchange. It effectively gained control of the company and installed a board made up mostly of Asians. Also in 1976, Asian and British board members were able to agree that Tun Tan Cheng Lok's son, Tun Tan Siew Sin, would be an acceptable replacement as chairman of Sime Darby's board. In 1978, Sime Darby was reincorporated in Malaysia as Sime Darby Berhad. Its HQ was moved to KL the following year, including all the principal divisions such as Plantation and Commodity Trading Division, Insurance Service Division, Tire Manufacturing Division, Heavy Equipment and Motor Vehicle Distribution Division, also Property Development Divisions. So basically, this is a financial snapshot of for year 2017 of a Sime Darby Berhad, where it generates revenue approximately about 30,000 million, earning before interest, tax, depreciation and amortization about 1,000 million. Sime Darby also has total assets worth 25,000 million. Profit before interest and tax about 700 million. Earning before interest, tax, depreciation and amortization about 1,000 million. Profit after tax and minority interest about 600 million. And also shareholders funds about 14,000 million, 15,000 million approximately. So as you can see that Sime Darby Berhad has almost in 18 countries and territories with 20,000 employees. To answer question 2 for the calculation of beta has been done in Excel, where historical data of Sime Darby has been taken from 1st June 2015 until June 2018 by monthly changes. Then historical data of market also been retrieved as a benchmark to find the covariance. As a result, calculation done in Excel provide beta of 1.13, which is slightly different from published beta in Yahoo Finance, which is 1.87. Sime Darby with a beta of 1.13 theoretically indicates that 13% more volatile than the market. A beta of greater than 1 indicates that the security price will be more volatile than the market, while a beta of less than 1 means that the security will be less volatile than the market. There are differences in the result of beta because the beta used in Yahoo Finance is beta of equity. Beta is the monthly price change of a particular company relative to the monthly price change of the KLSE. The time period for beta taken is 3 years, while Excel calculation is from 4 years historical data monthly. Furthermore, it seems that Yahoo Finance method uses total return adjusted data, which is all dividends included for the stock, while the price return for the index market has no dividend.
Next, we will proceed this presentation with question 3, which is the required rate of return of the Sime Darby Berhad by using the CAPM method to determine the required rate of return, and also by using the yield of 10 years Treasury bond as a risk-free rate. First of all, we're going to compare with 20 years US Treasury risk-free rate with the 10 years Treasury bond as a risk-free rate. The CAPM works is simplifiable of the capital asset pricing model. The goal of the CAPM formula is to evaluate whether a stock is fairly valued when its risk and the time value of money are compared to its expected return. Data taken above from the June 2015 to June 2018 and the data collected monthly. Thus, the beta gained through the regression of Sime Darby Berhad return versus the market return, and resulted beta of the Sime Darby Berhad is 1.13. When a stock has beta greater than 1, it shows high volatile in stock, thus it has a 30% volatile than the market. Next, take the expected market risk premium for the stock, which can have a wide range of estimates. Thus, based on the Copeland, Muller and Murin cited in 2000, they conclude market risk premium is preferable as 4.5%. A stock's beta then multiplied by the market risk premium, which the return expected from the market above the risk-free rate. The risk-free rate is then added to the product of the stock's beta and the market risk premium. The result should give investor the required return or discount rate of Sime Darby Berhad can use to find the value of an asset. Investors expect to compensate it for the risk and the time value of money. Thus, the risk-free rate in the CAPM formula accounts for the time value of money. Therefore, the cost of the common stock could be gained by using the formula above. The required rate of return by using 20 years US Treasury is 5.7%, meanwhile the yield of 10 years Treasury bond risk-free rate is 4.83%. The required rate of return is the minimum return an investor expects to achieve by investing in a project.
For the calculation using the historical data obtained from annual reports of Sime Darby for the past 5 years, which is from 30th June 2014 until 2018, the average growth rate for dividend per share shows 4.8%. Anyhow, the data collected shows that the dividend growth and the EPS was not constant and declined from the year 2015 until 2018. On the other hand, it shows a negative earning per share and average dividend growth rate for the past 5 years as per the data collected from various websites with various analysts. Considering their calculation, the negative value of the growth rate as negative 8.05%, negative 9.7% and negative 28% shows that the analysts have assumed Sime Darby net profit has dropped up to net loss in the past 5 years. Anyhow, it is not that calculation of analysts is accurate, as Sime Darby's net profit has declined dramatically and not running on loss. Thus, Sime Darby still managing to provide dividend every year to its shareholders.
According to the question 5A, the actual common stock price of Sime Darby Senior Berhad for the year 2018 is RM2.43, which is get it from the historical data. They came out the figure by multiply the earning per share with the price earning ratio. To calculate the estimation of a common stock of Sime Darby Senior Berhad for the year 2019 is RM2.46. First of all, I need to find out the estimation value of earning per share and price earning ratio. After analyze the historical data, I estimated the earning per share for the year 2019 as at RM0.14. Based on the table, we can examine that the earning per share has been declined slightly for the past 4 years and end up at the RM0.28 at the year 2018. Thus, I assume that the amount could be reduced for the next year too. Meanwhile, I estimated that the price earning ratio could be as 17.6% based on the table. The price earning ratio was not constant for past 4 years. For the first 2 years, it has been decreased and then increased back as much 22.72% in year 2016 and again fall down as at a 9.70% and 8.69% at the year 2017 and 2018 respectively. Therefore, I assume that for the next year 2019, price earning ratio could be rose up again approximately into 17.6. Therefore, I conclude here the answer for the question A is actual is 2.43 RM and the estimated common stock price is RM2.46. Sime Darby Senior Berhad as non-constant rate for the past 4 years. At the year 2015, the growth rate was negative 19.20% and it kept constant for the year 2016 and 2017. Later on, the percentage was decreased into negative 9.70% at the year 2018. Therefore, I assume that the constant growth rate at the end of the 5th year is negative 19.20%. It is because the amount was frequently and continuously repeated for the past 3 years. Most probably, this value could be repeated in 5th year too.
So, in conclusion, as per estimation, Sime Darby's forward dividend yield and return on investment are likely to be higher. In addition, Sime Darby's price to earnings ratio is also expected to be lower, making it cheaper to purchase. And this will be more attractive for the investors to hold Sime Darby. However, a decrease in dividend per share for past 4 years does not mean that it's financially unstable. For example, in year 2018, it did not pay out the dividend to its shareholders because it is using its profit to reinvest for a new product. This reinvestment into the business can potentially produce higher dividends in the long term.